afternoon, everyone. I, CS Khushbu Mohanty, Deputy Director at ICSI, extend a very warm welcome to all the speakers and participants in the 13th session of Triple E 5.0 Master Knowledge Series, which focuses on basics of SME IPO. Dear colleagues, all the SMEs are the backbone of India's economy. Right now, SMEs are driving innovation, job creation, and economic growth. This sector provides employment to over 80 million persons in India, and this sector is contributing about 30% to 40% of the GDP, besides 45% of the total manufacturing output and 45% to the exports from the country. However, this sector often faces challenges in accessing capital, limiting their growth potential. To address the issue, the Indian Capital Market Regulator SEBI has introduced a new avenue, SME IPOs. So by listing their shares on stock exchanges, SME can directly tap into public market to raise capital. And this not only provides a much needed boost to their financial resources, but also offers a host of other benefits. So we as the governance professional company secretaries are vital for some small companies to understand the regulatory requirements before rolling out the IPO and even post-issue compliances, and to build the capacity or member in this particular area, which is now the hot topic nowadays. So this session is scheduled, and to deliberate on the topic of the session, we have with us eminent speakers like CS Chami Dharod. She is Chief Channel Manager IPO Listing NSE. Welcome to you, ma'am. Miss Nidhi Maheshwari, Senior Manager. She is a Chartered Accountant, SME Listing NSC. Welcome to you, ma'am. And CS Nitin Somani, Founder and Director, Sunday Capital Advisors Private Limited. So now I would like to introduce all the speaker by reading out their brief profile. Miss Dharod, she is an accomplished CS and law graduate with a decade of experience in regulatory compliances. She has been with the NSC for a decade, currently serving as a chief manager in the listing department. She has also participated in various discussions and initiatives at SEBI aimed at shaping and refining regulatory frameworks. Her current role involves a keen focus on IPO processes, where she oversees compliances and approval procedures, ensuring companies meet regulatory requirements before listing. Ma'am, welcome to you to this session. Then I will introduce Ms. Nidhi Maheshwari. She is a chartered accountant with 12 years of experience in lending business across various sectors, SME, mid-market, and startups. She holds a senior manager position at National Stock Exchange and is responsible for SME IPO business development in northern region of India. Welcome to you, ma'am. Now, I would like to introduce our own Nitin Somani, sir, is a fellow member of the Institute of Company Secretaries of India, registered valuer for securities and financial assets with IBBI, and CFA from ICFI. He has also been conferred an honorary doctorate by École Supérieure Robert de Sorbonne, France, in the field of demerger and value unblocking. He is the founder and director of Sunday Capital. He is an astute professional with over 2 decades of experience in the financial industry in India. His rich experience spans across various segments of financial industry, including merchant banking, fundraising, capital markets, corporate and financial structuring, merger and structuring, business valuation, stock incentive plans, distribution of financial product. It is our proud privilege to have such eminent panel of speakers for today's session and get benefited from their words of wisdom in this technical area of SME IPO. Let me once again extend a warm welcome to all the participants and the speakers present today. I trust that today's discussion will enrich our understanding and contribute to our collective pursuit of excellence in SME IPO compliances. Over to you, Nidhi ma'am. Thank you so much.
Thank you so much, Ms. Khushbu. Thank you so much for your kind introduction, and welcome to everyone. So I'll start. Good afternoon, everyone. And at the outset, I would like to thank ICSI and all the respected members for giving this opportunity to showcase our platform and to tell you about what is NSE Emerge and what NSE is playing role in SME IPO ecosystem. And we will also talk, about the roles and opportunities being a CS professional, what they can, perform and, can be a part of this SME IPO evolving ecosystem. So let me share my screen for this. Just give me 1 minute. I hope I'm audible to everyone.
Yeah.
Let me please confirm once my screen is visible.
Yeah, the screen is visible, ma'am.
So, in my today's presentation, I'll cover what is NSE Emerge platform and what are the eligibility criterias and what are the benefits being a listed entity, and what kind of roles and opportunities is available being a CS professional. So I'll start with some introduction of NSE, though it is not required as such, but National Stock Exchange is world largest derivative exchange, and we have been largest from 5 consecutive years. It has been ranked in second in equity segment. If I need to talk about market capitalization of all the listed companies, when I'm saying market capitalization, it means market value of all the listed shares in market is around 5.16 trillion. On the right side of my slide, it is mentioned the offerings from the National Stock Exchange. Today, main topic is IPO SME segment, and we will focus on it. Now moving towards the NSE Emerge, like in starting, Ms. Khushbu has mentioned the importance of SME segment. Why this SME segment is important? Because it contributes around 30% of our India's GDP. So any segment which relates to MSME sector is crucial for any economic growth. Uh, what we have observed, what are the problem statements? So problem statement is scalability of SME segment. What happens? So any micro company can convert to small to medium. What is the problem? That is the scalability. And why it is not scalable? Because they don't have a excess of problem for the SMEs. There is a dedicated platform in National Stock Exchange in the name of NSE Emerge, which was started in 2012, and it is regulated by SEBI. It works in same manner as for the main board company, but yeah, it's a separate segment where any SME company can come and raise the capital and can use it for for the business growth. Now I'll talk about some numbers. Like till May 2025, total company listed on NSE Emerge is around 619 companies. And these 619 companies has cumulatively raised around 17,244 crores. Market capitalization of all these NSE Emerge companies is close to 2 lakh crores. If I talk about the migration from SME to main board, because we do have two board, one is for main board where large companies and mature companies can come and raise, and NSE Emerge, like I have mentioned, SME companies. So out of these 619 companies, already 144 companies have been migrated to main board. So option is always available to all the SME companies, then they can come and migrate to the main board subject to the other eligibility criteria. Now I'll show the evolution of SME IPO market. So like I have mentioned in my previous slide, total 619 companies have been listed. So to do first 300 companies, it took us 10 years. First 10 years we have done only 300 companies, but next 300 companies we were able to do in last 2 years, that is in FY24 and FY25. And FY25 have been a phenomenal year in terms of the amount raised in capital market. Total 7,000 has been raised in a single year. So it shows the trust of the people, on the entrepreneurs, on the SME IPO market. Now I'll tell about the eligibility criteria. So it is very simple, like like you can see on my screen. With respect to eligibility criteria as per the SEBI, so the company should be a limited company. So private limited company will convert to the limited company. And with respect to paid up capital, there is a eligibility criteria up to 25 crores. If a company has a paid up capital up to 25 crores, they can come on NSE Emerge platform. So there it has been, breakdown in next three terms. If paid up capital is less than 10 crores, so mandatory they can come on the NSE Emerge and can raise the fund. If paid up capital is between 10 to 25 crores, so they do have a sure company do have an option, either they can come on SME or main board. But if paid up capital is more than 25 crores, then main board is mandatory. Other than this, there are some additional eligibility criteria where National Stock Exchange, like our exchange, do the focus, and those are operational history should be of 3 years. Out of 3 years, 2 years should be profitable, and for 2 years, minimum operating profit should be 1 CR. In addition to this, we say positive net worth should be positive, and FCFE should be positive at least for 2 years out of 3 financial years. And now question comes, what is free cash flow to equity? So free cash flow to equity is calculated mainly from the cash flow from the cash flow statement. So cash flow is the main tool to check any financial tool, to check any financial status of the company. So cash flow from how we check, free cash flow from the operations. Uh, though it is net cash flow from operations minus capex plus net borrowings minus interest expense. So this is the formula to check whether company having the positive FCFE or not. So these are the basic criteria. I will repeat just for your remembrance. 3 years operational profit. Out of 3 years, 2 years should be profitable, and for 2 years, minimum profit should be 1 CR. Paid up capital less than 25 crores. FCFE should be positive. These are the basic eligibility criteria to check whether a company is eligible to think or to come on the NSE Emerge platform. Other than this, there are some regulatory framework, like a company should have to dilute at least 25%. The RHP is in same format as it is for the main board. Yes, in SME IPO, there are two main factors. That is, one is 100% underwriting is required, and market making is for 3 years is required. Though these options are not there for main board companies, but it is compulsory from the point of view from the SME IPO. And migration is also possible. Like I have mentioned already, 144 companies have been migrated to main board, but it is subject to all the conditions fulfilled as per the main board. Post listing compliance, though it will be covered later in detail by my colleague Ms. Charmi, but just to brief that listing compliance are little lighter side if I compare to main board. Mainly it's half yearly and annual audit report company has to disclose, and corporate governance norms as per the main board. Now there are some other eligibility criteria also, but I'll skip. If someone wants to understand, I'll share my deck. They can go through, and if someone wants to connect, please feel free to connect and discuss. Now it comes when can a company get list on NSE Emerge? So there are certain stages. Like for example, when you start a company, it's an idea stage. Idea stage generally funded by either owners capital or friends and families. Next आता है when you want to idea has been finalized, now you want to develop your product. So product development can be either funded by your venture capitals, angel investors, or government schemes. Once your idea is finalized, when second you have finalized and see that product has a scale, it can be it finds some scalability, then next it comes at a growth stage. So at a growth stage, when you say that company product has been finalized and you want to extend or expand the business, in that case NSE Emerge comes into the picture, where a company can come and raise the capital. So this is when can a company list on NSE Emerge. Next comes when and how can a company list on NSE Emerge. So basically a process which is actually main important factor. So once you have finalized, you have a client who want to come and who want to raise the capital, but what could be the first step? So we always suggest first step is always to interact with the NSE SME team, who will guide you, who will consult you how and when you can raise the capital, and what are the basic criterias, what can be the compliances you have to fulfill. So first step, we always say that please come to us and have a discussion. Second is appointment of intermediaries. So when I'm saying intermediaries, in a IPO process, there are multiple intermediaries involved, like merchant bankers, market makers, underwriters, depositories, and others. Main are the merchant bankers. Merchant bankers who lead the show, who prepare your offer document. And once your offer document is prepared, then next step comes filing with the exchange. Once filing is done, then NSE comes into the place, where they do a proper due diligence. After once your due diligence is done and it forms satisfactory, then your in principle approval comes. And this in principle approval is basically what should I say? In principle, approval is valid for 1 year. When you find that market is positive, conducive, and you can open your IPO. An IPO can be open for 3 to 7 days, and once IPO is closed, on the third day, a company can get formally listed on the exchange. So this is the process. First two steps are very critical and very important. First, to connect and interact with the NSE team. Second, appointment of intermediaries. So these are the benefits why a SME should consider a listing. I'll tell you only 4 or 5 points. First, other if company needs fund and they are not coming to equity market, but if they choose a loan path, but there would be a monthly EMI obligation. So company has to pay monthly obligation, versus when a company comes to the equity market, so there is no such as EMI obligation, but company can focus on their business and can grow their business. Second, other option could be a capex can be done, or the business growth can be funded through the internal accruals. But to do the accumulation of those internal accruals, it may take at least 5 to 7 years, versus IPO process max to max takes 18 to 24 months to prepare a company for IPO, to prepare a DRHP, then after DRHP filing and due diligence, and then IPO, it takes max to max 18 to 24 months. So this is, time saving can be done, and a company can raise the funds from capital market and can invest in its business. Next is unlock enterprise value. What it means? It means when a company come on the Emerge platform, or I can say the exchange, then they get us good value of their shares. So these shares can be used as a collateral for further funding. Another, there are some businesses or some kind of business model where bank find difficulty in doing funding, so those cases can become in SME market and can get listed. Other than this, obviously a company when come on the exchange, visibility has increased, credibility has increased, corporate governance ka, they get the taste of corporate governance and discipline. So there are so many benefits being a SME, being a listed company. Yes, so this slide is very much important from a point of view of professionals, ki how professionals can play a role in IPO segment. So if I need to talk about roles and responsibilities of the opportunities for our CS members, like we do have CS members in this webinar. So a CS can be a compliance officer, where they can ensure the compliance with the regulatory. They can ensure the compliance with respect to listing agreements. Other than compliance officer, they can be a they can extend IPO consultation services. They can be a part of full-fledged IPO process. They can extend the advisory services. Other than this, even the opportunities inherent in merchant banking division. So what we have observed, many merchant banking division have been either CAs, practicing CAs, or practicing CS grown up companies become a merchant banking companies. So definitely that option is always there. And like I have shown that how 300 companies have been listed in last 2 years. So no doubt more SME companies going public, there is demand is increasing for all these CAs and CS professionals. So definitely benefits and opportunities are there for CS professionals. But to perform these roles, what are the required skills? What are the skills required basically? Mm, mean a person should have very well versed with the SEBI regulations, ICDR, LODR. A person should have the ability to ensure all the compliances. A person can also provide the advisory services for what should I say, a corporate structuring, capital structuring. Basically, they can also provide these type of the services. So yeah, these all about eligibility criteria, process, basic for the SME IPO companies and the roles and opportunities what CS can have and can perform. Now I will invite and request Miss Charmi. She can add in this, and also please throw some light with respect to compliance or the regulatory for the SME IPO. Charmi, am I audible to you?
Yeah.
Yeah.
Thank you, Nidhi.
Thank you.
So, as today I would be just sharing some of my insights on how an offer document is important for a company as such, and how what are the contents that would be covered in the offer document with the observations that the exchange has come across in the past few years. So, I hope my screen is visible.
Yes, it is.
Okay. So, as we understand during the
Now it is not
whole entire
visible.
journey of the IPO. One second, I'll just share it again. So it's visible now, right? So, coming to this, the whole IPO journey for an SME IPO, we understand that offer document that is being floated for the public investors is the most important document that is floated during the journey of the IPO. So, whenever the company who plans to come up with an IPO has to bring up this offer document, which will have multiple details of the company. So, it's necessary for everyone during that journey to ensure that correct and adequate disclosures are being forming part of this document. So this document is governed by the various provisions provided in the SEBI ICDR regulations, the Companies Act provisions, and certain guidances provided by the stock exchanges, SEBIs, and other regulators as such. So this draft of the offer document may be of three types. Maybe say the RHP, that is the draft offer document, which would be filed with the exchange and SEBI at the in principle stage, that is before opening the IPO as such. Then it is the RHP, that is the red herring prospectus, that would be filed at the time of opening the issue. And once the whole thing is done, that would be a prospectus. So this case, the three types of offer document that would be filed by the company during the whole journey of the IPO. Coming to this, the disclosures in the offer document, why is it important to have adequate disclosures in the offer document? Is because the investor who is making a decision to make an investment in the company is purely based on the disclosures that would be made by the company in the offer document. Hence, as good disclosure in the offer document would invite good investors to the company. So it is very important for the company to make correct disclosures in the offer document to not just to invite the investors, but also to build a trust with the investors and give a good image, market image of the company as such. So what are the kind of disclosures that are covered in this offer document? Are the disclosures relating to the business of the company, the financials of the company, the management of the company. More going further, it would cover the capital structure of the company. How is the capital structure? Who are the shareholders of the company apart from the promoters? Who are the selling shareholders in case there is an OFS in the IPO as such? What are the litigations against the company? The whole history basically about the company would be covered in the offer document, so that the investor understands what is being what is the company in which it is putting the money in as such. So while reviewing these offer documents when they are filed with the exchange, we have certain observations that we see, and that can be taken care of by people while they're drafting this regular offer documents, so that the investors as such get a better clarity on the company. So we'll be sharing some of the important observations that we have come across these various chapters in the offer document. This would be starting with the business of the company. So briefly, what we understand in the layman's term, what the company is doing should be disclosed in this offer document. So it's not just about what the company is doing. The disclosure also requires a detailed disclosure on what the company is doing, how is it doing, what is the capacity of the company to be, in case it's a manufacturing company for example, say. So all this kind of disclosure should be there in this offer document, which would be in an easy and a layman in a language that a layman understands. So there would be some cases that we have come across have given complex business structures, as in how the structure of the company, what the company is doing is not given in a very simple manner, because a investor who is reading it might not have the technical understandings of the business of the company. So it is important that we have simple structures disclosed in the business. The whole thing, what is the company manufacturing? For example, if it's a manufacturing company, what is it manufacturing? How is it manufacturing? For whom it is manufacturing? What is the capacity? Matlab, how much can it manufacture? All these kind of details should come in that section of the business. Further, moving to the other section is relating to the capital structure of the company. So the capital structure of the company would give the entire detail of from the incorporation to the company till the date of filing of the offer document with the exchange or SEBI, as the case may be. So they will give the whole list of the fundraisings that the company would have been done, or any other kind of shares issuances that the company would have done, which will give a complete picture on who are the shareholders of the company, which will also get some insights for the public shareholders. So while looking at these chapters, what we have come across is like there are certain regulations says that there should be no outgoing corporate actions or anything as such, but there would be cases that today the DRHP is being filed, there is some issue that would be done for the fundraising or bonus issues, something that would be done today only, and then those shares would not have been credited, and all those corporate actions with the depositories are still going on. So this kind of small understanding gaps or something of that sort should be handled while they are being filing in the draft of a document. Entire the capital should be in the demat form for the promoter. So all these things needs to be handled while filing this offer document. Even there is a provision in the ICDR per se which says that the minimum promoter contribution, which is 20%. So the promoters holding of 20% in the company should be there, and that should be logged in for a certain period as prescribed. So which number of shares can be considered as this minimum promoter contribution, which shares cannot be considered? There's a whole lot of list given in the ICDR, which is required to be complied. But when we have come across, when there are some filings done with the exchange, shares which are actually not allowed to be considered as minimum promoter contribution, though they are the shareholdings of the promoters, are being put under this minimum promoter contribution bracket. So while filing this offer documents, this all things need to be carefully considered. Litigation chapter is one of the more important chapter that is being part of the offer document, which will provide insights on what are the litigations going against the company and what are the litigations filed by the company. So this is not limited to the company, it even goes to the promoters, directors of this company. So any litigations that are against this promoters, directors, issuer company or filed by them will be disclosed in the offer document. This here is very important to understand that disclosure pertaining to litigation should be adequately disclosed. It should not be the case wherein you just say that particular XYZ litigation is against the company that is going on. But what is this litigation about? What impact will it have on the company can be understood only if the complete facts about that litigations are disclosed in the company. So today, if a layman investor who wants to invest in the company will definitely read this litigation and understand if there are any critical litigations against the company, which will impact the functionings of the company if any adverse decisions is taken against the company. So all this kind of information can be ascertained by the public shareholders only if they are given adequately in the draft of a document. Next chapter is with respect to financials and the risk factors. So financials of the company for the last 3 financial years are to be disclosed in the offer document. So these financials are not just the audited financials, they need to be restated financials. So the restatement needs to be done before the IPO, and once this restatement is done, then only the. So while restating these financials and reviewing these financials, it is observed that when the exchange is reviewing them, it is observed that there is scenarios wherein there would be sudden financial jumps in the company. For say, company had a 10 crores of revenue in the last year, and now it's suddenly having 70 crores, 80 crores of revenue. So in a general trend, how the industry of that company is functioning, what is the financial growth in that industry, and what the financial growth the company has suddenly shown, what is the financial growth for the PAT margins of the company, profit margins, is all required to be adequately disclosed, and the rationale why there is a sudden increase or decrease, this all rationales also needs to be disclosed in the offer document. Say if the example that I gave, say 110 crores and then the 80 crores, why this jump? If I just take the business increase, the sales increase, it's not the rationale that gives an adequate disclosure on why the financials of the companies have increased. The actual reasons on how did the company increase it, what was behind it that supported the company to increase its revenues, all needs to come in. So when a disclosure coming in the financials will, at least if this kind of disclosure, detailed disclosures comes in, it is supported for the company itself so that their financials are well explained. Also, the transactions, the kind of transactions the company is entering into needs to be looked at. There would be some cases wherein the nature of the business would be that there are high RPT transactions. The company would be dependent on its subsidiaries or some group companies for the whole business that is performing. So it is important to look at what kind of the structure of the company is. When the company is going public, inviting funds from the public, and these are the kind of transactions wherein it is a high risk for the company, since it is being dependent on various related entities, it is then it's a kind of a disclosure which is warranted again in the disclosures here in the financials of the company. Again, if there are any kind of investments that the company has made and it already has that liquid cash in the financials, the balance sheets of the company, or in liquid cash or investments of any source, and the company is still coming up with an IPO stating that XYZ is the reason which the company needs and funds for. But looking at the balance sheets of the company, if you understand there are already the cash, the investments that the company has, it is again then becoming difficult for the company to explain that what is the need of the funds that the IPO is being launched for. So all this needs to be looked at while the financials of the companies are being placed and the IPO is being brought up. Coming to the other chapter being the risk factors. So these risk factors are very important in the offer document since it states about the risks that are in the company. If I am supposed to invest in the company, today, apart from the looking at the financials and the whole business, how the company functions, I need to even understand what the risks are associated with that company if I'm putting the money in that company. So this risk would be internal risks or external risks. So internal risks would be the risks that are associated due to some factors that are within the company. And external risks would be due to some factors that are not within the company, outside the company, but that would be impacting the company as such. So this kind of risks, all these risks need to be disclosed in this chapter and state risk factor. So these risk factors also should be sequenced depending upon the materiality of these risks. Say if there is a list, very small factor that is impacting the company cannot be disclosed as the first risk factor, because as if I'm an investor, if I'm reading the risk factors, first I should immediately get to understand what is the biggest risk for the company. So that all needs to be handled while drafting these risk factors. Also, there would be certain risk factors which we are highlighted in the slides that this all kind of risk factors should be basically covered. So these are the general risk factors which are impacting all the companies, not the specific industry. However, there would be any risk which would be specific to any industry or any company as such which is coming up with the IPO, that needs also to be considered apart from the general risk factors which we have highlighted here. Objects of the issue is one of, again, an important chapter in the draft of a document which talks about why the fund is being raised by the company. What would be done by these funds that the company is being raising? So it is very important again to disclose what would be done with the funds that would be coming in the company once the IPO is launched. So these funds would be in the form of, say, working capital that the company would be needing, or any other form of capital expenditure that the company wants to do for which it needs a fund, or any other object for which it is needed. But when you are raising funds, it is important to disclose what will be I achieving after doing this expense. Say if I'm doing a capital expenditure, I need to explain what would be achieved by the company by doing this capital expenditure. What benefits, for who would be the vendors from whom which I am purchasing those assets which would be used as a capital expenditure for this capital expenditure. All these things need to be disclosed adequately in the draft of a document. While reviewing the draft of a documents, what the exchange has come across is like this disclosures are given that XYZ would be the amount done for so and so object. But the details of those objects are not adequately disclosed in the offer document. It should be clearly stated in the offer document what is the benefits that would be arising out of that object that the company would be incurring, the funds that would be utilized. What is company that has, maybe in some scenarios, company would have done similar kind of expenditures in the past. You can support it with that. Say if you are using this money for the marketing expenditures of the company, you can say what kind of expenditures the company has already done in the past through which it has already achieved some XYZ things which has benefited the company. Hence, you are also proposing to do such kind of expenditures in the future for which you are raising the funds from the IPO, which would be a good disclosure supporting the rationales why the expenditure. Just not just saying that I would be doing so and so expenditure. So this is all important while we are going through the objects of the issues. There is one more important thing that has been disclosed in the ICDR itself. It says that in case of any kind of projects that are being funded through this IPO proceeds, and the whole project consideration is not being funded from the IPO proceeds. Say the whole project is of the 100 crores. I am just raising 20, 30 crores from this IPO proceeds. Rest would be either managed by the company by taking some loans or by through internal approvals of the company. Here, in case there is something apart from internal accruals, which would be the source for managing these funds, the IPO proceeds and internal accruals, if anything else, the loan that the company would be taking. The company should be having firm arrangements of say, at least 75% of that amount towards that object. So this is strictly monitored and mentioned in the ICDR itself. So those things need to be adequately looked at while the offer documents are being filed. Also, the period within which the amount will be utilized, say 1 year, 2 year, how it is going to be utilized, what are the necessary approvals that the company would be requiring to undertake that object, government approvals, any other licenses that would be required. All this disclosure should be adequately given. So the person who is reading that will completely understand why the money and how it would be utilized by the company. So this kind of disclosures should form adequately in the objects of the issue. Apart from these major chapters that we have covered, there would be some small observations that Exchange has also made while observed while reviewing the few of the offer documents that we were going through. First of which would be, there would be IPOs that have filed by the company wherein certain CBI or other regulatory investigations are going against the promoter or against the issuers of the company, which will have a quite big impact on the company as such, may be having. So it is not a clear thing now, but it is a contingent thing. So it might have an impact on the company, which is today not just clearly mentioned. So it is this kind of disclosures ideally needs to be made in the disclosure because it becomes a bigger trigger for the public investors as such. Also, the government approvals which the companies are required to obtain for performing the business of the companies are required to be disclosed. But there have been times wherein these important approvals at all are not obtained by the company and the functionings are still going on. Say the manufacturing unit, they need a factory's license. All these licenses are not there in place. And the company is operating that factory, which is then impacting the business of the company. So tomorrow if something happens, since the company is not having those licenses in place, it might have to shut down its manufacturing facility. And then the company, the whole business of the company is at a toss. So if all these kinds of approvals should be there in place at the time of filing the offer document, but if they are not there in place, then it's a bigger problem as such. Coming to the ICDR disclosures, again, the promoter group, all these details need to be disclosed in the draft offer document, which is clearly mentioned in the ICDR, but there would be instances that these disclosures are not given in the draft offer documents that come to the exchanges as such. This leads to not a good quality of drafting, the kind of a disclosures that come to the exchange. So the examples that I given before for the other chapters which we had covered earlier, let's say object, business, litigations. So all these observations we have made, and if these disclosures are not adequately provided in the draft of a document, and while exchange is reviewing it and they see that this kind of disclosures are not there in the offer document, it is becoming difficult for the exchange also as such to process those documents, because the minimum information that is required are not provided in the draft offer document, which leads to the quality of the offer document is compromised as such. So in order to deal with all these things, what exchange has done is they have come up with a policy wherein they have stated certain criteria in which the exchange can return the draft of a document, that is not process, not approve those draft of a document if those criteria are fulfilled. So the one entity who is drafting the draft of a document, looking at the IPO of the company, would be aware of XYZ situations which they need to handle before they are filing the draft of a document. So there are no non-compliances as such tomorrow once the draft of a document is filed. So these criteria are provided on the exchange's website on the link that we have shared in the screen, on the screen as such. So while reviewing the draft of a document, if we see there are any of the issues which are already mentioned in this policy, we may return the draft of a document of the company, and then exchange has a right to decide whether they will be applying a cooling off period of say 6 months on the company or the merchant banker as such, looking at the gravity of the issue in the draft of a document. So just to give a small idea on how the applications have moved in the company, how number of approvals that we have given and the number of withdrawals by the bankers, the issuer company that has been done upon exchange raising clarification. This is a brief snapshot of the last few months that have occurred across. So this was whole about the draft of a document as such during this the whole IPO journey. Coming to the role of the company secretaries as such, we being company secretary, we have a great amount of role in during this IPO journey, and especially for this draft of a documents, the drafting of draft of a documents. Here we would be advising the companies on the draftings, assist the companies, the various intermediaries as a company secretary, looking at the compliances of the company. We would be playing a greater role as such in this draft IPO journey as such. So the role of the company secretary is not just limited here to dealing with the intermediaries, but it would have a greater role involving the wherein you can even assist the companies on this drafting of the draft of documents as such. Just to give a small idea on what are the post compliances that the company will have to do once the company is listed, because here also the role of the company secretaries do come in, wherein they are advising the companies on the compliances that they are required to do. So these are few of the quarterly and half yearly compliances. The quarterly compliances, as you say, it is an integrated filing wherein the corporate governance details in the brief format which is prescribed by SEBI is required to be submitted with the exchange. And again, a reconciliation share capital audit report is required to be submitted on a half yearly basis. This reconciliation of share capital audit report will provide the details of the shares of the company and the number of issuances or buybacks, if any, that has been done during the quarter to ensure that the capital of the company is in line with the listed capital of the company. The half-yearly compliances again come to the shareholding pattern, wherein the details of the shareholders of the company, the promoters, public, all these details would come in. And these details are to be filed with the exchange within 21 days from the half year, each half year. Then again comes the financial results for that half year ended, and along with that would be the statement of deviation or variation wherein the company has done any fundraising. The utilization of that funds need to be disclosed in the statement as such. Others are few annual compliances and event-based compliances. So this compliances are in detail given in the LODR provisions or the regulations of the SEBI as such. Even this compliances, the details are made available on the exchange website on a detailed compliance report that is there on the website, which the all of us can refer and then do the necessary compliances with the exchange. So all these compliance reports that are being submitted even are made public so that the investors, the shareholders get the information required on a timely basis. So this is what we as the exchange would wanted to cover and give our insights on how the draft of a document is as such during the IPO journey. So now I
Khushbu, we can hand over to
Yeah.
Khushbu.
So that is
And
all
if
what
they
I
ask any
wanted to add
questions,
from
Yeah.
my side.
I would like to
Thank you,
request
and I'll just take it. Request.
yeah, I would like to request Nitin sir to take over the session.
Thank you, Kashfu.
Thank you, sir.
I think, Charmi, I think you will have to disable the sharing, the screen sharing. Thank you. Hi, good afternoon to all the esteemed members of the Institute. And thank you, Nidhi and Charmi, for setting the tone of the presentation today and detailing the opportunity, the listing requirements, and the observations which are commonly found in the offer document while you process any document for the NSE Emerge listing. Now, to take the discussion forward, I'd like to touch down on few details with regard to the pre-issue structuring, how to make your company ready for an SME IPO and other related aspects for an IPO. So taking forward what Charmi said about the role of the company secretary, I'll add on something more to it. I'll say you have to be the Hanuman for the IPO process, not just a KMP. You have to carry the entire burden of the IPO on your shoulders. Because being a company secretary, you have learned everything during your qualification process. You have worked on the financials, you have worked on the direct indirect tax, you know how to calculate the ratios, you have learned business administration also. So it covers everything during the course journey. Now it is only the time when you can use the skill sets, showcase your quality to the management, and give the deliverables to all the intermediaries who are involved in the IPO process to make it a grand success. Now, coming from the basic side, some of the slides I'll skip in the presentation, which have already been covered by the NSE officials. So coming with the basic fundraising option for a company, it can be either self-fund, it can be crowdfunding, which is more not a legal term as such, but which means raising funds through your known sources. Then there can be angel investment, venture capital investment, there are business incubators, and you can always work on bank loan also for temporary purposes till you achieve a growth phase. Now, these are predominantly in the financial industry term. These are said as seed funding, where the promoters, the close friends and relatives of the promoters put in the money. Then comes the angel funding or the pre-series A funding. Under angel funding, these are key investors who understand your business in much more matured manner, and they can guide you to take the business from the current level to a level where you actually elevate the operations and increase the size of your business. So you are getting ready for the VC funding by using the angel funding. After VC funding, there can be various series of round A, B, C, and D, which are generally fall under VC funding and the P funding category. And once you are funded with an investor, you always have to give an exit also to the investor. And the IPO is the best route for an exit to be given to the investor. If in case there is a company where all the funding have been done by yourself, by the promoter, then in that case, it is not necessary you are giving an exit to someone, but you can always directly come out with an IPO also. Now, when we go for fundraising, there are two markets available. One is the domestic market, another is the international markets. International markets are not relevant for the today's discussion, but when we talk about domestic markets, it can be an IPO or a follow-on public offer by an existing listed company. That can be done in form of a fresh issue or an offer for sale. Offer for sale means where any existing investor or the promoter is selling their stake and the money is going to their personal pockets rather than the money coming into the company. So we say that fresh issue is always for the growth capital, and the offer for sale is something where an existing investor liquidate their investments. Then when you get listed, you have much more ways of raising the funds. It can be rights issue, preferential allotment, or there can be hybrid of convertible instruments or warrants also, which can be used. Now, what is definition of SME? This is a term which has been very widely used for last 10, 15 or 20 years, but there are different definitions attached to the word SME or MSME under different regulations. The core and the first thought which comes is the MSME Act, in which the definition has been given for the micro, small and medium enterprises. These categorizations have been done more on the size of investment in plant and machinery and the annual turnover. However, the definition is restricted from the MSME Act criteria only. But when we come to the IPO side or the stock exchange side, the SME is a different category altogether. There is a different definition attached to it. So why do you want to come out with an SME IPO? Today, if I talk about in the last 15, 20 years, the Indian economy has grown a lot. There have been new opportunities which are coming in. The source of funding domestically have improved a lot because of the mutual fund investments, SIP monies, and the fund flows which are coming in, and which are providing a huge opportunity to the investors also to grow along with the SME business enterprises. This is the core and the primary reason why the SME market have improved so much in the past few years. And still we believe that there is a lot, we have just seen the tip of the iceberg. There is a lot of growth and the fuel remaining in this industry. A lot of good businesses are coming up with good business potential, and every business owner has limited access to capital, be it their own capital or be it the bank funding capital. So at some point in time, to take the giant leap or for taking your organic growth into a geometric regression, you need to have the outside capital, and the equity fundraise through an IPO is the best route available for this. Why? Because you are raising fund based on the strength of the company. You are raising fund for long-term objective, and you are also trying to align the strategic investors while doing an SME IPO, because SME IPO, the ticket size, minimum ticket size is at least 2 lakh rupees. So you are targeting to investors who have the capability to understand a business, who can take and who can hold the investment for longer term to get returns out of these investments. Then being a listed SME, you get the visibility also and a prestige increases, because right now I believe there are some 15, 17 lakh companies in India. But when we talk about listed company, there are a handful of 7,000 roughly companies in India. You get that positioning also. Then liquidity for the shareholders is one concern which always comes in, but being listed, there is a natural market available which is free for trading. So liquidity constraints also remain muted. And being listed, you can always come up with certain employee incentive schemes also, which are linked to stock incentives. So this also motivates the employees and make them partners into your growth. Now, key differentiators into a SME and a main board IPO. I'll just touch 2-3 points. In capital requirement in the main board IPO is minimum 10 crore. However, there is a maximum ceiling of 25 crore in SME. The minimum application size in main board is 10 to 15,000 rupees. However, I think this has not changed. In SME, it is minimum 2 lakh rupees. Then trading lot in main board, you can trade with one share also. In SME, the trading lot is specified based on the pricing. And in board, you need 1,000 minimum number of allottees. However, in SME, it would be 200 allottees. Now, coming to the positives and negatives of an IPO. Why do you want to get listed? What is so exciting about this? So we'll talk about the positives, which is easy access to the capital market. There is a flexibility always for raising of funds in future. There is an independent value creation and assessment of the company, and the wealth creation happens for all the associated stakeholders with the company. There is an exit strategy for PE or VC investors. Liquidity will be there for the shareholder. There is an enhanced transparency into the system, because you have to undertake half-yearly compliances, give your results on the exchange platform. Although some of the SME companies are also doing quarterly compliances, also CEO motto, to make the system more transparent. You build up your systems accordingly. Then it is also a tool for retaining the employees by way of an stock incentive plan. Then brand visibility and enhancement with the customer recognition, and lower cost with the main board when you go listing on an SME platform. However, yes, every coin has two sides. So similarly, there are positives, there are negatives also. It is a time-consuming exercise. You have to completely revamp the business organization structure. You have to ensure that all the compliances and every document is in place, so that the transparency which we are talking about as a positive, that can be reflected into the system. No doubt, SME is a little cheaper in affair to manage with the main board listed company, but yes, it is still highly costly compared to a debt instrument. Then there is a loss of entrepreneurship control. Then peer pressure and performance will always be there, because once you are listed, your shareholders will always try to compare you with your peer set. And there is a cost involved for the maintenance of listing and compliances. But what you can do as a professional, you can work in advance, you can plan for your future course of action, And you can try to convert these negatives into positive by identification of risk, putting in place the growth strategies, and streamlining the corporate structure and compliances. So whatever negatives are there over the next 2 years or 3 years when you get listed, you will feel that as a part of your system, and this becomes a process. So these negatives will no longer be negative, but will be a strength for your organization. Now, I'll just move across further. Now, when I'll talk about the key challenges for an IPO process. As a banker, when we go ahead and work for a company, what all challenges do we face? One, the business proposition. When you are an SME, you do your business into your own fashion, but putting it right onto the paper, presenting it to the regulator and then to the prospective investors is something different. Then what is the scalability of the business? Is a business just growing with an incremental revenue of say 5% or 7%, or it has a potential to increase to 15, 20 or 25% also, because shareholders and the investors will always be excited with the growth stories. Then what is the acceptability of that business in the market? This is also equally important. What is the differentiating factor for your business with your peer set, and what is the growth potential? Then comes the question of what is ideal capital structure. When we talk about an SME, we say the maximum cap is 25 crore. So we have seen certain times a company with a top line of 50 crore has also put their capital at 15 crore. Is this really required? What is the ideal structure with which you should work? Because at the end of the day, once you get listed, you are earning profits and you want to distribute dividend. You have to distribute dividend on the face value of 15 crore. Had been your capital would be 5 crore, you would have to pay dividend, same 10% on face value dividend on 5 crore value only. So these are few differences and nuances which we want to build in while determining the ideal capital structure. Secondly, how the promoter contribution has to be worked out. In one of the recent issues, there was a promoter contribution which came in because the promoter's existing capital was not eligible to be parked as promoter contribution for 20%. So these kind of structurings are required prior you do the IPO. Then is your capital very small, say 10 lakh or 20 lakh rupees? Is there a requirement of a bonus or a split of the face value? How the issue price should be placed into the market? All these are the questions which fall under capital structuring. Then comes the valuation. For valuation, there is a detailed exercise which has to be done. The regulators have come out with certain disclosures on the KPI parameters, which showcase that how your company is basically showcasing your business, earning profits, how your top line are growing, what are your costs involved, whether with your peer set. But this is not just one valuation parameter. Every company have different traits which determine their valuation. Some companies may be driven by their profitability, some may be driven by their R&D, some may be driven by some other multiple factors. So while you determine the valuation, you have to work down, create a business projection model, how the money which is coming through an IPO will take you on the growth journey, and then careful assessment of the fair valuation. What discount multiple you have to apply, what should be the risk-free rate of return, what is the market expected returns, all those have to be worked out. So this is again a detailed exercise which has to be done separately along with the entire assessment process. Then management, what is the right mix of the board? You need independent directors, you need women directors, then you need CFOs and CS at KMPs, then you also need senior management personnel in terms of basis of business. If you are a manufacturing company, is there a plant head available? If you are a service industry, is there a sales head? So similar to business requirement, there are different categories of key management personnel or senior management personnel. You have to identify them and accordingly give their disclosures. Then come the objects of the issue. This we have already touched in the previous presentation. Applicability of license and regulations also. Insurance, one thing it had to be ensured that your entire fixed assets should be covered through an insurance claim. Certain companies we have seen they cover their gross block, certain companies cover their net block. There is no rule around it, but the point is that at least your replacement cost of the fixed assets and plant and machinery should get covered. That is the ideal insurance coverage which you should have. Secondly, what is the historical insurance claims? Have you locked anything into the claims? And what are the employee-related insurance? These actually elevate, this is a qualitative factor which elevates the profile of your organization. Coming to business, there are various other things which have to be disclosed along with your top 10 customers, suppliers, how much dependence is on them, what is the geographical segmentation, what are the segment-wise revenues, what is the business process, your CSR policy, compliances in terms of infrastructure. Do you have suitable power facility available? You have water facilities available. Then HR related data and property owned or leased property data. One more point over here, the strength and strategies. When we draft an IPO document, we have to avoid any kind of futuristic statements. But strategies is one portion where you can slightly touch on and you can work on how you want to grow your business. So you're talking a little about the future aspects based on your current strategy for the growth of the company. So this has to be carefully determined. And secondly, there is also a requirement that these strategies should be adopted by the board in their meeting so that, and the disclosure is also appropriately captured in the document so that shareholder knows that these strategies have been reviewed by the board of directors also. Now, what is the key to a successful IPO and listing, and what is the future? We have tried to summarize into 4 parts: assess, plan, execute, and sustain. First of all is assessment. You have to set your house in order before the fundraise. Most of these topics we have discussed in the previous presentation. Then we also have to consider the right timing for the market. There are multiple factors which affect the timing. Macro factors and market condition. If we talk about a period from February to June this year, there were multiple international level events which impacted the market and the fundraising was not there. However, now with the market sentiment being positive, the fundraising has again kicked in. So we have to consider the macro factors also. Valuation is also predominantly linked with the macro factors. When the markets are buoyant, you will get a good, decent valuation. But when the markets are not in good shape, you always have to take a call on the valuation and you have to offer a discount, a substantial discount to the prospective shareholders. Then what is the company readiness? We have created a chart in terms of how to make your company ready in a period of around roughly 12 months. Depending on the size of the organization, it can be 15 months, 18 months, or 24 months, but there is a certain time period required to make the company eligible for an IPO. It cannot happen कि आज सुबह promoter उठे बोलते नहीं मुझे company लिस्ट करवानी है काम हो जाएगा. So you have to work on that also. Then competing equity pipeline. When LIC was coming out with an IPO, no other merchant bank or no other issuer company dared to open any other issue because the IPO size was so large and huge that and people, obviously LIC was coming out with their maiden IPO, so people were more and more inclined towards IPO of LIC. So you have to also work on what are the competing equity pipeline into the industry as a whole and into your competitive segment also. And then last is the investor appetite, that whether investors are willing to invest such kind of companies or not, and what kind of premiums you can expect in the market. Now, how to get ready is a little detailed extension of what we have already discussed. Now, how to plan? First of all, you have to create a vision for the organization, without which you cannot move ahead. Once you create a vision, you have to identify the strategies and the roadmap that how you want to achieve that vision. Maybe it can be a 2-year plan, 3-year plan, or 5-year plan. Then you have to estimate the future projections based on what you have created in the vision document and how these projections and the financial numbers have to be achieved. Yes, time is always an essence for coming out with an IPO. You do not have the luxury of time in any business which you are undertaking. Then you have to immediately fill in the gaps in the organization, structure, then compliances, whatever else required to meet the listing norms. One of the key factors which comes over here is if your company has a higher net worth, then transition from Indian GAAP to Ind AS, which predominantly in SME it does not is required. And second is the restatement of the financial statement, because in most of the cases, like if I share an example, gratuity accounting year 14, that is something which was never adopted in the historical financial statement. But when the company goes for an IPO, this is one thing which always gets triggered. So these kind of things have to be filled up. The more in advance you do, it's much more better. Then assessment of the fair market value and the fund requirement, and to create a balance between the value and the price. This is the final decision-making aspect. Now, when we talk about an execute, this is broadly a timeline which we have thought in terms of an SME IPO because SMEs are relatively a smaller business, and the business verticals also in a company are just one or two business verticals. Certain times the more complex business models requires a higher time frame to complete this process. So in the initial phase, we talk about the internal restructuring, meeting with the management, setting the house in order, setting up your internal controls, creation of policies, liaising with the team, all these things comes into place. Yes, one more thing, what has to be carefully seen is consideration of ownership issues, succession planning, and taxation. If you want to create a trust, it is always advisable you create a trust structure for succession at least 12 months before you file the DRHP, because otherwise these shares will not be eligible for lock-in of minimum promoter contribution. So these kind of things have to be thought well in advance. Then comes the second phase where you are ready with your corporate structure. Then you actually start working on the IPO documentation. For this, you need the consolidation of all the information. You need create the virtual data room. Then you start the due diligence process, appoint the lawyer, the merchant banker, the RTA. You start getting your shares into dematted, creating the visibility for your company, redrafting of the financial statement or restated financial statements. And so all these activities have to be done. The next phase comes, it is more near to the IPO when you appoint the other intermediaries required, be it your PR agency or your banker to the issue, underwriter, market maker, and other intermediaries. Then the merchant banker conclude the due diligence process. Then pre-IPO initial meetings are undertaken with the institutional investor to get a feeler of the IPO pricing and the valuation for the company. Then you hold internal organizational meetings at more frequent intervals to complete this entire process. And you also need to educate your employees with regard to the listed environment, be it sharing of your UPSIs or with whom you can share, what are the compliances, insider trading restrictions. So all those processes have to be educated to the employees of the company also. Then at the final leg in which you file the offer document with the stock exchange, obtain the approvals, and then the IPO process comes into picture. Now, these are few advantages which are there for the SME listing. For the company, the advantages are in terms of fund availability, create better leveraging capabilities because your net worth will improve. Then visibility and creating track record with customers, suppliers, institutions, media, investors, etc. And better liquidity in terms of entry and exit to the investors. When we talk about the regulatory advantages, in terms of income tax, predominantly the shareholder will be benefited with a lower concessional rate of 12.5% on long-term capital gains and a tax rate of 20% on short-term capital gains, which in case of unlisted companies is 30%. Then there are simplified disclosure notes on an SME platform. And other the advantages are enhancing value for all the stakeholders. A stock incentive plan can be created for motivating the employees and setting up of internal risk management and governance systems, which always improve the quality and the output for the organization. Now, how to sustain? You just have to create your mission, target the mission, achieve the mission, and repeat this exercise. That's the simple mantra for sustaining a listed company. Eligibility criteria, already Nidhi had discussed onto it. We, as a merchant banker, try to put it in a comparative aspect. I'll request the institute to share this presentation so that members can go through that comparative eligibility requirements also. Issue process, when you actually appoint an intermediary, so it starts with the appointment of intermediary. The major ones are the merchant bankers, the advisors and professionals, the lawyers, and then other intermediaries come into picture. Then you work on the strategy. Then the due diligence is a continuous process which will keep on happening. The documentation. Then you have to go ahead with the regulatory approvals. After that, the marketing strategy, the roadshow, press and broker meet, and meeting with investors will have to be done. Then prior to opening of the issue, the filing of the offer document with the ROC, statutory advertisements have to be completed. If it is a book build issue, then you have to work on the price band also. Then issue closure, allotment, listing process completes, and post-listing there are certain compliances like FISC or FCGPR filing. I believe FCGPR has been done away with RBI in the immediate past. Market making have to be undertaken. Then there are routine listing compliances. And one more thing is there, it is SFT return filing under Income Tax Act. Then when we talk about the issues can be of two types. One is a fixed price issue, another is a book build issue. Under fixed price issue, you just go ahead with one pricing and you close your offer document. There are no missing blanks in the offer document. When we talk about the book building, there is always a price band. Say, for example, 100 to 120. The maximum cap is 20% to the floor. But however, there is also a minimum cap of 5%. So when you give this range in a red herring prospectus, you do not know at what price the final issue will be finalized and the allotment will be made. It can be 110, 115 or 120. So there are certain blocks which we say blanks in the offer document. In the RHP exchange, this is a price band which will go. Once the issue closes and the allotment is getting finalized with the final post-issue data of the applications received, the final price will be determined and adopted by the board, and then the prospectus will be finalized. The difference between both the issues is in fixed price, minimum 50% had to be reserved for the applicants on the retail side and balanced for non-retail. However, when we come to the book building side, it is 50% for the institution, 35% for the retail, and 15% for the non-institutional. Market making, it is a requirement, mandatory requirement for post-issue. This is a small table which is there in the SEBI circular. The thresholds beyond which the market maker, within which the market maker has to hold inventory, they have to give a buy and sell quote for at least 75% of any trading day. This is a compulsory requirement for the market maker. On post-issue requirement and compliances side, there are certain general applicability. One is SEBI LODR, one is SEBI prohibition of insider trading and SEBI takeover regulations. There are certain event-based compliances, which may be SEBI ICDR, buyback, or your ESOP regulations. So these are some of the event-based applicabilities. Migration of main board has already been touched. The only thing is that you need 2x of the favorable vote from the public for getting the shareholders' approval for migration. Now, objects of the issue. Firm arrangement. This is one of the critical factors. I tried to put that through two different examples. The first example is where only the IPO proceeds are being used and the internal accruals will be used for the objects of for meeting out the objects of the issue requirement. Now, say for example, ABC and XYZ are the requirements of the object, be it capex, working capital, loan repayment, or anything else. That is a requirement of 90 crores, and the general corporate purpose is 10 crore requirement. Now, this is proposed to be funded through 95% from the IPO, and company said 5% we will use from internal accruals. So what has happened in that case? 95% is the firm tie-up against the 75% requirement. Within this example, if I say instead of SME IPO of 95 crore, if a company says we will come with 70 crore IPO and 30 crore as internal accrual, this will not qualify with the requirement because you are meeting only 70% of the firm arrangement requirement. Now, second example is with respect to the similar kind of fundraise, but including a loan facility. So instead of 95 crore in IPO, if you are coming out with an IPO of 60 crore and 35 crore is the loan, again, you are complying with the requirement because 60 plus 35 is the firm arrangement. However, for loan, it is very clear that there cannot be an in-principle sanction letter. It has to be a firm sanction letter from the bank. So there were some amendments which came to the SME IPO very recently. First is the minimum application size of the market lot. Initially, it was minimum 1 lakh up to 2 lakh, but now it has been made 2 lakhs with a minimum of 2 lots. The minimum public shareholder size has been increased from 50 to 200. Earlier, the monitoring agency was required for 100 crore plus issue size, which has now been reduced to 50 crore. Plus, there is a requirement of submission of auditor's certificate also till the funds are fully utilized. Then prior track record in case of conversion from partnership to proprietorship or partnership to the company. It was allowed with certain condition, but now the requirement is that there should be at least 1 full year of existence and 1 full year balance sheet should have been prepared before you come out with an IPO. Otherwise, historically, there have been cases where the partnership have been converted and the IPO has come out within next 6 months. So that has not been that has been disallowed now. Now, changes in promoter. If there is a change of 50% or more in the promoter category, then the DRHP can be filed only after 1 year from such change under the new regime. Reporting of working capital requirement. If there is a requirement of working capital of more than 5 per crore, then the statutory auditor certificate have to be placed for with every financial results in future. Why this is so? Because working capital is quite fungible and very critical. So mostly the issues were coming up with working capital requirement based on the future projections. But the nature of the capital is such that once the payment is received from the customers, the payment comes into the normal pool of the money of the company, and therefore the exit applicability and utilization of these funds cannot be identified after the first usage. So that is the reason why it becomes more critical, and the emphasis have been put by the regulator on more close monitoring of the working capital utilization. Then conversion of all outstanding convertible securities before the IPO is required, except options which have already been granted, and fully paid outstanding convertible securities, which otherwise also as per the regulation is required to be converted before RHP stage. Merchant banker due diligence certificate is required to be filed now at the time of draft of a document only, and it had to be supported and filed along with a site visit report undertaken by the merchant bankers. This site visit report, I'll request all the professionals that when this is happening, please ensure that the key personnel who are managing these sites, the factory or an office of the company, are available during the period of such kind of inspection and visits. Then additional disclosure in offer document with respect to the site visit report is now available for inspection by members. And since it is available for inspection, it will also be filed with ROC at the time of filing of prospectus. Disclosure of details with regard to ESI, PF, number of employees, and yes, separately, all the delays in respect of payment of ESI, PFs have also to be aggregated and to be disclosed in the offer document, in the business chapter, and also in the risk factors. Then disclosure of the fees paid to the merchant bank in any form or nature it is paid, or for any purpose it is paid, everything has to be disclosed. Then post-issue exit opportunity to dissenting shareholders in case there is a change in the objects of the issue after listing. Earlier, this opportunity was available only for the main board. Now, this opportunity to the dissenting shareholders will also be available in the SME IPO. There was no disclosure with regard to the KMP or SMP litigations earlier, but now that has been included. Minimum operating profit EBITDA level have been quantified now as 1 crore. And please ensure that we are talking about operating profits, so all other incomes have to be removed while calculation of such operating profits. Allocation for non-institutional investors in book building issue has been now put to draw lot. This is a allotment process which otherwise will take a different session altogether if we get into the discussions. Then offer for sale, it has been now restricted to 20% of the total issue size, and a selling shareholder cannot sell more than 50% of their pre-issue shareholding on fully diluted basis. This is again a condition only in SME IPO. When you are doing a main board IPO, there is no such condition. Then promoter lock-in. Earlier, 20% of the post-issue capital used to be locked in for 3 years, and remaining promoter shares were locked in for 1 year. Now the 3 year remains as it is, but the remaining which was locked in for 1 year, that has been pushed to 2 years, with 50% release on year 1 end and 50% on the completion of second year. Then general corporate purpose. Earlier companies had a flexibility of putting general corporate purpose at 25% of the gross issue size, which could have been increased to 35% if there are unidentified acquisitions. Now it has been restricted to 15% of the gross issue size, or 10 crore rupees, whichever is less. However, the limit of 35 crore remains as it is if there are unidentified acquisitions. Then repayment of promoter loan is not permitted under an SME IPO. DRHP of an SME IPO will also be available for public comments and review for a period of 21 days. Any of the public category, individual or in prospective investor can put their complaints or comments on this offer document, which have to be suitably replied by the issuer company or the merchant bank and address those complaints. Then increase in paid up share capital beyond 25 crore. This was something which had a few concerns in the past, where the companies were trying to raise some fund. Because of these fund rates, the paid up capital was exceeding 25 crore. And there were certain questions whether it can be done with migration, without migration. So SEBI has given red to all these questions. They have said that you can continue and you can increase beyond 25 crore, but it should be because of fresh issue. It cannot be because of bonus. Then this should be should undertake either for meeting the main board compliance. These companies will have to meet the main board compliances, including corporate governance, quarterly results, but they will continue on the SME board till the compulsory market making period has not been completed, which is 3 years. Now the post-issue indicative listing timelines. Way back in 2010, these were put at T plus 12 days. Later on, that was reduced to T plus 6 days, and now it is T plus 3 days. Practically, as a professional, I'll share and I'll tell you, it is not T plus 3 days, it is T plus 1.5 day only for execution. In the second half of the second day, you will get the approval from the exchanges for listing, and third day, your share trading starts. So this is the key and the most critical aspect in terms of getting the company listed, because you cannot fault on these timelines. Any default or delay in these timelines means payment of interest obligations, inviting the regulator to your home, and a reputational issue. So please avoid any kind of delay on these timelines. So the first day, on the issue closure day, the bid file will be received from the stock exchanges. These bid files will be validated. The RTA will work on these bid files, and they will ask for the final certificate from all the bankers to the issue. And based on that, they will finalize all the rejections. They will start working on the rejection data. On the T plus 1 day, they will finalize the rejection. They will prepare a draft basis of allotment in consultation with the issuer company and the merchant banker. These will be filed with the stock exchange, and the allotment will be approved on T plus 1 day. And one thing I missed out, on T day, you also have to finalize your prospectus in case it is a book building IPO. Then on T plus 2, the fund credit will start coming in the public issue account. The SCSB will start transferring the funds. The RTA will give all the instruction to the banker to transfer the funds. Then the corporate action will happen for the demat credit, and by evening, the shares will get reflected in the account of the successful allottees. And a draft of the basis of issue advertisement have to be submitted with the exchange. With this, exchange will process the application, and if all the documents are in order, they will give the approval by the evening, and the third day, the trading will commence. Now, what are the documents which are required for the public issue as an advisor or a consultant to the company? This is a broad outline of what all goes into the IPO documentation, segregated into different chapters, and each of the chapter have their own specific requirements of disclosure. Some are regulatory, some are obligatory on the company, and some are varying based on the business and the industry in which the company is operating. I'll give you an example. In the earlier presentation, we were talking about the capacity, installed capacity, and the capacity utilization. Now, if there is a manufacturing company, you know what the plant can manufacture during a period. But if there is an assembly cum manufacturing unit, you cannot assess it directly, because assembling is something different, where you just buy out the parts, assemble it, and roll out the final product. So you have to decide how you have to showcase that capacity, installed capacity for the company, whether it should be on the number of pieces or tonnage wise, or it has to be by man hours which can be utilized. So this is something which has to be worked on. Secondly, when we also talk about the manufacturing capacity, for example, there is a wire company. If they are drawing a wire of say 2 millimeter and they are drawing a wire of 2 centimeter thickness, the extrusion lines will run at different speed. With 2 millimeter, the speed will be much higher. With 2 centimeter, the speed will be lower. It depends on what kind of product you are manufacturing, and based on that, the capacity may change. So very careful assessment have to be done. So this is just one aspect. There can be multiple different aspects to each and every different industry and different business where you have to work on. Intermediaries, we have all discussed what kind of intermediaries are required. Finally, we require, as a merchant banker, when we talk about all other intermediaries, we also require certain certification from a practicing CS in terms of capital structuring, in terms of your search report from the ROC database, there can be certain secretarial compliance certificates also. Especially these certificates become more and more important where the company do not have any data because the data has been too old. For example, the incorporation documents of the company or the increase of authorized share capital, something was done in 95 or 96 and the form is not available today. In all such cases, as a practicing professional, you have to first verify the records of the company. Then you have to do a physical inspection of the ROC records. You also have to do an online inspection of the ROC record if that document is available. After that, based on the minutes and other documents, you have to provide your certification that what all batch informations have been collated. Based on that, what is the disclosure and what is the final number which has to be incorporated into the DRHP. So this certification becomes very important. Secondly, certain times we have seen a bank was taken over by another bank in the past. There were some charges which were outstanding with the earlier bank, but the new bank is there. Now there are 2 charges outstanding on the MCA portal. Both the charges are showing as open charges. All these have to be rectified. Any charge which is not outstanding today have to be closed and the application have to be filed for that. If there is any correction required in the company master data, those corrections have to be filed. If there have been any non-compliances which are critical in nature, whether the company has filed for an adjudication or compounding or not, these applications have to be finalized and submitted before filing of the offer document. So all these are something where the advice of a company secretary and a practicing professional become more and more important. So these are certain documents where you should focus in terms of making the company ready if you are into practice. If you're into a job and you're working as a company secretary of the company, then entirely whatever we have discussed, all those becomes applicable to you. You have to work on each and every aspect related to it. Now for documentation, we have tried to summarize it in 2 different manners. One is the secretarial, financial, legal, business and certification related aspect. Into secretarial, the resolutions for the meetings. Again, a question comes whether we have to provide 5-year minutes or 3-year minutes or 8-year minutes. We generally say you have to keep everything ready since inception because minutes, annual returns, the register of members, share transfers have to be available from inception. These are not those data which can be weeded out in 8-year period. So all those have to be ready. Then key industry regulations. Again, this is a very critical aspect because small things we have seen which are not compliant certain times. For example, Shops and Establishment Act. For example, Labor Welfare Fund in Delhi. It is hardly some paisa to be paid per employee, but Labor Welfare Fund compliances are done by very few organizations. So these things have to be taken care of. Similarly, history and other corporate matters where you have to work on all the changes in the memorandum and memorandum of the company, the registered office changes, authorized share capital changes. You have to work on all kind of shareholders agreements and arrangements. You have to work on all subsidiaries and joint ventures which are there. The key terms of these agreements have to be drafted and have to be clearly disclosed in the offer document. Promoter and promoter group and group companies have to be identified. Similarly, for financial related matters, although the involvement of company secretary is little lesser into it, but I'll not say that company secretary should not be involved into it because at the end of the day, when the financial statements are signed, whether it is in compliance with Schedule 3 or not, it has to be ensured. The numbers is something which, okay, the CFO will be taking care of, but at least from the disclosure point of view, whether everything is covered into that financial statement as per the requirement of law or not, it has to be ensured. Financial indebtedness, where again the loans outstanding, the charges which have been registered with the ROC, all those have to be verified. Then we come to the business related, which is business overview and the objects of the issue. This is more from the commercial side when we talk about the business. But yes, object of the issue requires the commercial angle also and the regulatory angle also. Legal side, we bifurcate it into broadly into litigation, risk factors, government and statutory approvals, and agreements. Again, with the intermediary, we are talking about the merchant banker, market maker, underwriter, banker to the issue, RTA agreement. There are multiple kind of agreements which are executed during this process. Then there are certain non-mandatory certifications like we discussed, build-up of capital structure, management certificate, compliance on corporate governance, your ROC search reports, all these will fall under non-mandatory certification. Now, again, broadly, just highlighting some key chapters from the offer document and what you should keep ready. When we talk about licenses, please ensure that you are aware of all the applicable licenses and the regulations on the company. You have clean canned copies of all such registrations. Yes, original also you keep ready for verification, but at least keep the canned copies ready for the immediate sharing with the merchant bankers. Then the world is very dynamic today. The regulations are changing very frequently. So please be aware of all new regulations. Then all IPOs which are there, whether registered in the name of the company or registered in the name of individual promoters, whether any assignment of these individual registered IPOs have been done or not, all these documents have to be ready. Every renewal has to be made appropriately within the time frame. So when we create a chapter on the licenses, we put the license number, the registration required under which act, what is the date of receipt, and what is the due date of the renewal. So you have to keep a tab on that due date column also. Then small registrations like shops and establishment, PT, labor welfare funds, all these have to be complied with. When we work on the business, be thorough with the business, because as a compliance professional, if you are not aware of the business, then you are not aware whether the compliance is being undertaken or not. So you should know where the factories are getting operated, what are the products which are manufactured in the factories. Then you need an NOC from the customers if their names are being disclosed in the offer document. Then what are the brands which are owned by the company? What are the conflict of interest of the promoter with the company for which they are coming out with an IPO and other promoter group companies? How you are resolving that conflict of interest? What are the order book of the company, the supporting document for that, the business strategies, employee related data, and property related data. When we come to the objects of the issue, first and foremost requirement is that the objects of the issue should be approved by the audit committee and the board of directors. You have to table a detailed agenda before the board and the audit committee, chalking out all the details that how the funds will be used. Maybe it cannot go in detail in the agenda item, but you have to place the draft of the objects of the issue document with them, which will give all the details in terms of how the money will be used, the period over which the money will be used, what are the expected benefits out of this utilization of funds. Everything have to be placed before them. It always builds up as a good defense for future if the business has not gone into the right direction. At the end of the day, it is business. Business can always flourish and business can remain stagnant also. Then ensure fulfillment of requirement of third-party professional certificate. For example, working capital. If you are raising fund for working capital, if you are making a loan repayment, there are certain specific disclosures which have to be certified for repayment of loan. Fund deployment. If you have already taken bank loan for a particular project and some funding is coming from an SME IPO, so funds which have already been deployed, for that you need a certification. Then you have to obtain quotation for the capital expenditure which is being proposed to be incurred. Here we have been advised by the regulators in the past also that you just don't go through with one quotation. Seek an alternate quotation also. See whether these kind of quotations are favorable for the company or not. If the company is going with one particular vendor, also see the reason why they are going with one particular vendor if the quotation is higher also. It might be possible some vendor is aware of the environment of the company's factory. They know how the things have been laid out over the last 5, 10, 15 years when the plant has been built in. And if you're going ahead with the same vendor, it's okay, but there have to be a reason and rationale for that. Then status of present ongoing capex and vendor due diligence is also one of the important aspects which has come because you have to ensure that you are raising public money and this public money is going to the right vendor who is capable of delivering the capex and other instruments to the company. Now coming to the litigations are predominantly for the promoter group, director, KMP, SMP, company, subsidiaries and holding company. Here, just taking a declaration from the director or promoter is not sufficient. Today, we are living into a digital world. If an individual has a GST registration, there is a professional chartered accountant who has been appointed as an independent director. He will be having a GST number. Ask the director to log in onto GST portal, give a screenshot of the notice received. This will ensure that there are no outstanding litigations. So this is the due diligence which has to be built up. Similarly for income tax, similarly for traces, wherever online it is available. Remaining you leave to the job of the merchant banker. They will ensure that everything else is collected. And litigation cover all litigation, no exception. Even when we talk about disclosure of material litigations, certain times what happens on the GST part, there have been some dues which are being accumulated over last 5 years on the similar matter. In each of the 1 year, the matter is not material, but when we combine all 5 years, the matter becomes material. So unless you collate all the litigations, you will not come to know whether it is material or non-material. So you have to work on each and every litigation, and then you have to decide whether disclosure falls as per the regulatory norms or not. Then for capital structure, all forms related to authorized share capital, paid up capital, Path 4, Path 5, valuation report, third party certificate, bank statement for receipt of money, separate bank account, all these documents should be in place. Each and every document will be verified for the purpose of due diligence and ensuring that compliance has been done. Then ensure timely demat of shares. Last year also we have experienced, current year also there have been some deadline for the unlisted companies also to get their share dematted. And because of the excessive workload, there have been certain gaps in terms of filing of the application and generation of ISN at the end of depositories. So always ensure that this process is completed well in advance. Keep the share allotment, share transfer register and register of members ready. These are the most crucial in terms of assessing the buildup of the promoter, the buildup of the selling shareholders, and also in terms of calculation of the cost of acquisition for the promoters. Although there are individual ITRs also for the promoters, which may give you a number on cost of acquisition, but these have to be cross-verified and the document should always be in sync. Then what are the convertible instruments outstanding? The cost of acquisition for promoter with the backups. Again, cost of acquisition, if I give you one more mode of verifying, the ITR of an individual. Nowadays, if you're holding unlisted shares, you have to give the number of shares held and the value for which the shares have been held. So these are different modes of assessing and verifying the numbers. Then calculation and assessment of minimum promoter share contribution, whether the company is compliant or not. Is there a requirement of implementation of stock incentive plan, or if there is an stock incentive plan, is it in compliance with the SEBI regulation and whether adequate disclosures have been made? And the capital buildup is not just for equity shares, you have to build it up for the preference shares also and also for the other securities. Now coming to promoters and directors, the requirements are more or less similar in terms of the KYC. You need the KYC documents, which is predominantly Aadhaar and PAN for each of the member of promoter group, directors, KMP, SMP. However, for promoter and promoter group or directors, you also collate their PAN, their passport, their voter IDs or their driving licenses. Bank statements are also required for the recent period. In promoter, when we have to identify the promoter group, prepare a tabulated format, put the name of the promoter. There are certain relations which have to be identified. Brothers, sisters, siblings or children, parents, similar relationships of the spouse, all those have to be identified and put into a tabulated format. Along with that tabulated format, also put the columns of their PAN number and the addresses as per Aadhaar, so that it becomes easy for the later time when the document have to be filed with exchanges. Then what are the companies with which the promoters or directors are associated or disassociated, or any company which had been delisted in the past? All those data have to be collated. In terms of employees, KMPs and SMP, there are a couple of things more which are required. Backup document for each of the qualification, each of the experience without any fail. If the experience letters or the qualification documents are not available, then there's certain standard process which have to be followed, but these documents are mandatory. Then what are the remunerations or compensation paid to them? And what is the attrition rate? So it's not just the overall attrition rate of the company, it is also the attrition rate among the KMP or the SMP category, which is required. Now, what are the key contributions? So that goes back to the first slide, which I said that you have to be the Hanuman for the process, not just a KMP. So you understand all these things. You understand the corporate and securities law, the business management, accounting and auditing, financial statement, financial management, direct, indirect tax, and anything if I missed out. Everything have been studied. You just have to collate all your information. You have to brush up all your memory, put the same to use, and make the entire process dependent on you so that you are able to control the entire IPO and you are able to take the journey to the next step for the company for which you are working. Especially if I talk about the larger side IPO, they always have a designation called IPO manager. There is a single point of connect wherein every data get collated. So you try to become that point wherein you not just collate the data, but you also understand the sanctity of that data and the requirement of that data and how to present it. So I think that was all about the presentation today from my end. I'll now hand over this back to the ICSI team. Khushbu.
Thank you, sir, for such a detailed presentation. I'd like to share with you that right now there are 15,000 company secretaries who have joined this webinar. So I think it is such a nicely presented by all of you. We have received some queries on that SME IPO. I think all you have covered, like the exchange perspective, the professional perspective, and sir has already covered all the documentation part also. But we have received certain things, like I'd like to ask that to Nitin sir, before going for SME IPO, in case the company had contravened the object clause of Memorandum of Association, then what are the measures for the company to take in case of compounding or adjudication, and whether the company can go for that proceed to go for SME IPO after taking such corrective measures?
Okay. So in normal case, for example, you have contravened some provision with respect to the allotment. You have not received the money in a separate bank account. You can still file the compounding or the adjudication application, and with that filing, you can go ahead with an IPO. The regulators have been kind enough to give approval till date. Charmi can throw more light onto it. But if it is a violation of the object of the issue, first of all, you have to go ahead, change that object, immediately file an application for compounding. You have to get a compounding order or an adjudication order. And once that is completed, then only I'll advise to file, not before that with the regulators.
Rightly said, sir. So all the corrective actions need to be taken well before the document is filed with the exchanges.
The second question is for Nidhi madam and Chami ma'am. Whether the angel and VC funds are prerequisite for SME IPO, or can a SME IPO go as just promoter owned? Though I'm unable to understand what is promoter owned, but
So yeah, I got it. So first of all, there is no prerequisite that a company should have any venture capital or angel investors. It can be a promoters running company who want to come in SME market to raise the funds. So there is no requirement as such.
and one more thing, that whether the SME IPO can be listed on both the exchanges like main board.
No, no. So for unlike main board, a company either can come on NSE or BSE. So here, unlike main board, where in main board, approving authorities is with SEBI, but in for SME companies where approvals come from the respective exchange. If a company, for example, ABC Limited, want to come in capital market, want to raise the funds, so they can file their DRHP either on NSE or BSE. They can't be, shares cannot be traded in both the exchanges.
Right. So again, a question for stock exchanges perspective, that what is the reason that main board entities may issue their equity shares even though those may not have any profit, but it is mandatory for the SME board entities to be profitable at the time of raising funds from the public? So what is particularly what is the main reason?
So please try to understand wide difference being a SME company and a main board company. SME company जो होता है, that is running by a single person. It's a promoters driven company. Majorly it's a promoters driven company, right? Unlike main board, this company is running by professionals, right? So for SME company, if an investor comes, what they will see? They will see what is the business, what is the business model, what are the financials, whether that business is able to generate the profit, whether business is viable to generate the enough cash to cover their opex capex, whether that business have that scalability to go to the next height. So this is the main reason where a SME company should be profitable. That means a company should have a good and viable business model. That business model should have a capability to generate enough cash for the shareholders as well. So this is the main reason where SME should be profitable to earn the trust of the investors on the viability of the business. Charmi or Nitin sir, you can add if I missed something. And SME market is more volatile. Unlike main board companies are well-known companies, or unlike SME companies. SME to जहाँ पर है, for example, if it's a Delhi-based company, तो before listing, it is known in Delhi only. But after listing, visibility has increased and it become has more visibility. Nitin sir and Charmi, if you want to add, what is the difference between main board and SME with respect to profitability?
That's right, what you said.
Sure. So basically, what happens when we talk about a main board company also, which is loss making, it is not that you can go ahead and just do the IPO. There is a different categorization between Regulation 6.1 and Regulation 6.2 for the main board. So if you're not earning profits, you have to play minimum 75% with institutional investors.
Right.
So always it is talked about the informed investors. The objective of SEBI is to ensure that the retail investors do not get cheated. The retail investors' money is secured and is in safe hands. What happens when we talk about SME? The vulnerability of the business is too high. And because of this, SEBI wants informed investors to come into picture. In main boards, a mutual fund will invest, a FPI will invest. However, in SMEs, you will very rarely find a mutual fund coming in. So this is the lack of institution coming in because of the size of the issue. There is nothing wrong with the company, but just the size of the issue. Because mutual fund are larger pure play player into the financial industry. And that is the reason why SEBI has also put a limit of minimum investment of which was earlier 1 lakh, now 2 lakh rupees, so that only investors who can understand the depth of the business, who can understand the nuances, the positives and negatives, and then the investor take a decision to invest into the company. It is more towards safeguarding the retail and the smaller investors.
Greatly said, sir.
So one more thing that a query is there whether SME IPO due diligence can be done.
If I complete that question, whether SME IPO due diligence can be done by a company secretary, so
yeah, it
yes,
is in that perspective only.
yes and no. Answer is yes and no. Because when the merchant banker comes, they comes with a regulatory obligation and an onus in terms of the due diligence. The level of due diligence which is expected by SEBI or by the exchanges from the merchant banker is completely different. They are also governed by the merchant banking regulations in terms of the diligence. As a company secretary who is into practicing profession, they can always work on to restructure the company, put things in order, what all we have discussed about creating the right capital mix, what kind of virtual data room has to be created. So every information which goes in the IPO document needs a backup. If we have to create that backup, so that is what due diligence means, that what you are writing in the document is true and correct. So this backup creation and everything can be done by a practicing professional. This actually lowers the burden of work on the merchant banker's shoulder, because if a merchant banker comes and they have the 80, 90 or 95% virtual data room ready, it becomes easy for them to access the data, verify the information and go ahead with their due diligence. So till that level, the promoter can, the PCS can bring the company to the IPO readiness. And what builds in an advantage, the costings of the merchant bankers are something different. While as a practicing company secretary, you can be more cost effective to the issuer companies. So you can play your own advantage over there in terms of being smaller in size of operations. You can have better cost efficiency, and this will act as a positive for you while delivering the solution to the client.
Thank you, sir. Now, this question is open to all. There is a question that whether the net proceed of SME IPO can be transferred to the company's accounts, and if suppose after raising the fund, the surplus of the company, whether the surplus of the company can be invested in equity or mutual funds?
No.
I think it is a
So net proceeds of the issue will be transferred to the company after receipt of listing and trading approval rather. Then only the net proceed can be transferred to the company. This amount will be transferred to a separate new bank account, a current account. This money will remain in that current account and will be utilized only for the specific objects of the issue which have been disclosed in the offer document. However, during the period that amount has been utilized, the amount can be parked with FD with a scheduled commercial bank. And the interest, whatever comes, can be flowed back to the same account or the normal current account. There is no specific guideline onto it. But definitely this amount cannot be used for equity investments or liquid mutual funds or any other kind of mutual fund investments.
You mean so there is no bar, but it cannot be done also?
No. There is a complete embargo onto it. You cannot do that. The regulations are specific onto it.
So what will happen if the amount is
Yeah, please.
so if the amount is put under equity investments or something, but however, when you are doing the IPO, wherein you have said that the amount would be utilized for an XYZ purpose, and if you are putting it under equities or under mutual funds, it becomes a different object altogether, which is an investing object. So that would change your object line, which is not allowed as such. The fund has to be utilized only for the purpose for it which has been raised. So if you change the object, the utilization changes, it will again create a problem for the company.
Fine. One more question is there. In case of offer for sale, whether they have to appoint the monitoring agency again, like the normal IPO?
No.
There is no need.
A monitoring agency is required only for that money which is coming in the company books.
Fine. And there is one more question on compounding.
Just
They want to know.
want to add, for offer for sale in SME IPO, there is a cap of 20% that they need to adhere. Otherwise, they no need to appoint any monitoring agency.
Again, they want to know that in case of compounding of application, whether the same needs to be disclosed in the DRHP.
Yes, it will be.
So they need to go ahead with the compounding, and all the necessary steps that the company has already taken needs to be disclosed, along with actions if there were any initiated against that company because of all that non-compliance. All that also needs to be disclosed.
Fine. Thank you so much. So we are done with the questions. I think we all have covered very nicely, and it was such a detailed presentation. So Nidhi ma'am has very beautifully covered what are the NSE Emerge, about what are the role of intermediaries and professionals, what they can do. And like Chami ma'am has covered what are the offer document, contents of the offer document, and like compliances post listing. I think it will be very helpful for the our company secretary professional, because many are asking question about SME, and the SME listing is booming nowadays. So every month you will see many SMEs are this listing, our IPOs are coming. So I think and the participation also shows they are very much interested in particular topic. And coming to Nitin sir has a very detailed presentation on all the most attractive part of this presentation was the timing of tapping the market. I think nobody will tell you when to tap the market, and macro level, micro level, and what are the challenges and what are the key to success. Means these are the things the participant look for the guidance, because regulatory and everything is fine, but the main crux of the timing of tapping the market. So I think many are invested in this SME IPOs also. So you have given a very detailed presentation on that. So I would like to thank you all, and a special thanks to all the participants. I think they have gained a lot of knowledge from this, how to do if they are professional. If someone wants to come with the SME listing, so now they know what needs to be done from exchange perspective, from regulator's perspective, and from professional perspective. So all the details, I think you have very beautifully covered. So thank you all. Thank you for this session.
Thank you so much.
Thank you.
Thank you, everyone.
Thank you, ma'am. Thank you, sir.
Thanks.
It was pleasure connecting you. Thank you so much.
Same here, ma'am. Thanks.